Good morning and welcome once again to Digital Look TV. Joining us today is Bill Hubard. He is Chief Economist at Markets.com. Bill, thank you very much for joining us.
Thank you very much for asking me. I wasn't sure the world would still be here this morning.
Well, it is, but perhaps only for another 3 months.
Exactly.
So we finally got an agreement. Investors got what they wanted, or did we?
Well, let's just say it was postponed. I mean, I think earlier in the year or end of last year, we were first worried about the fiscal cliff. We got really concerned about that and nothing happened. And then the sequester, we got worried about and nothing happened. This, except for really the backup in the Treasury bill market about 7 days ago, when they got very much concerned about who was going to pay the maturities for today, next Thursday, and the following Thursday. So we saw fairly sizable backup in rates. The rest, the market didn't seem to be concerned. I mean, yes, we had some sell-off in the equity markets, but was that due as much to the phenomenal run we'd had beginning of the fourth quarter, so some profit taking here. And then each time, as we saw yesterday, I haven't seen the markets today, but I mean, yesterday the Dow was up over 200, again on, buy the rumor, maybe sell the fact today.
But on low volumes, you were telling me
Yes,
before.
I mean, volume was about 18% below the 100-day average. And it's almost it's not as bad a volume as we'd seen in August, but it definitely showed that the market has been, whether it be bonds, whether it be stocks, whether it be foreign exchange, commodities, globally, most people have been on the sidelines watching and waiting to see if the midnight hour was going to strike this evening.
Somebody who was also on the sidelines, the Federal Reserve. People were talking about October tapering, December tapering. Where are we left now?
Well, I think two things. One, we got the beige book last night, and it said basically the same thing. It was moderate to modest, moderate growth and modest improvement in employment. And one of the points that you just said, and I think if we look at the May meeting, the June and the September meeting, the market got confused on what Mr. Bernanke was telling us. And was it a situation when, if you look through it, if you looked at the beige book, if you look at a number of the comments by the specific governors, it was saying, we're positive here, we're neutral there, we're negative so-and-so and so-and-so. And it really was basically, they were hinting that they were having a confusing time understanding the data. Well, if they had a confusing understanding for 3 meetings when they had the data, what do we do now? Because, I mean, even one of the Fed governors said yesterday, and I can't remember his name, was that this may delay legitimate economic data for as much as 2 months. Well, as we saw, we got no September non-farm payrolls. I mean, we're now in the third week in October. I mean, there's the rumor about, if everybody goes back to Washington today, could we get September non-farm payrolls sometime next week? Well, yes and no. I mean, I don't know. I mean, this is all just rumor. So the simple fact is, we haven't had any data. How long will it take, for that data to be collected, and will we see an improvement? Last week we saw in jobless claims plus 66,000. Everybody's saying, well, probably half of that were the people that were furloughed. Well, they're going to be furloughed when we get jobless claims today, and also when we get jobless claims next week. So how much of that, quote, furlough people then will be reciprocated? Will they go off claims? Will they go off benefits? And, again, for 2 or 3 weeks in a row was the computer glitch with the state of California.
Okay. On top of all of this, we have the new Fed chairman, Fed
we hope.
chairwoman.
I hope it doesn't take 4 years to nominate and get that through.
She's even more dovish than Bernanke.
Yes, yeah. And I mean, I would expect, after all this nonsense, that this will happen. But by that, hence the reason, once we got to October the 1st and it wasn't signed over and we went to shut down, the market basically now is implying that she takes office on the 1st of February. Okay, so therefore I haven't checked the schedule for next year, but you will probably have a January meeting and then an end of. So my call is for March at the earliest, a tapering.
At the earliest.
Yes.
Okay. As far as the entire debt impasse or fiscal impasse on Capitol Hill, from an ideological point of view, they have just kicked the can down the road.
Yeah.
They haven't solved anything.
No.
The problem is there. We will just have a repeat of the...
Exactly. I mean, the date. I think it's the 15th of January, and then they run out of cash again on the 7th of February. Well, it's a simple situation.
And the 13th of December also, the negotiations.
Yeah, I know that there's now a big meeting. Well, I tell you, as an American, I'm ashamed, okay? And since this is being broadcast on television, I won't use some of the words that needed to discuss those lovely young people. But I mean, you've got like 50 people in the ultra right-wing Tea Party, okay? That I guess they're helping Joe Bloggs and Fred Smith in downtown Iowa or someplace in Oklahoma or Arkansas, help keep their jobs. Well, if the global economy collapses, nobody's going to have a job. I don't care whether this, that, or the other. So they were thinking. I mean, you're thinking it was probably 1913 or 1813 rather than 2013 the way they were thinking. The only thing I can hope for is when this happened during the Clinton administration in '95, the backlash. And maybe very briefly, let me just say, the House of Representatives is elected or re-elected every 2 years. Yes. So everybody in the House of Representatives comes up for re-election in November of next year. And I think people will have long memories now.
Very long.
And as I say, the Republican Party took a major hit. Newt Gingrich became who? And I think, whether it be the ultra right-wing party, the Tea Party, and I mean, as we were discussing earlier, I mean, is now John Boehner,
they say he's out.
History.
Okay. Fine. So then we say the Fed is there as a sort of backup. They will not move until March. Markets, they were expecting a fudge, but this is almost not even a fudge.
No.
So will markets perhaps tend to correct? Or?
Well, I think one of the things that saved the markets, if you will, was the markets feeling ever since QE1, QE2, QE3 from the Fed, quantitative easing from the Bank of England. Although the ECB can't do it, I mean, the ECB even as recently as last week said, well, Euro's getting a little too high, in our armory, we probably still have. And the market feels we've got probably one more rate cut. And with Japanese, you said, whatever. But the simple fact is, okay, why worry? The Fed will take care of us, the Bank of England, the ECB, and the Bank of Japan. So the market putting faith where faith was justified. And as you just said, Janet Yellen is even more of a dove than Bernanke. The one thing that she's better at is communications. Okay? Having been a university professor, she is very good at communicating.
Okay, that'll be extremely important going forward. So then the euro dollar past 137, 140. You don't see that.
No, I mean the simple fact is, what is it? 136 again today.
136.50.
And if we go back 18 months ago, before Mario took over, it was a question of Mr. Trichet and then Mr. Draghi was both saying 131, 132 is that line in the sand. Anything above that is going to be murder for exports from the Eurozone. And we see this here in the UK, 160, 162. These are disastrous numbers for foreign direct investment and also exports. And again, we have Boris Johnson, Osborne been in China for the last couple of days. Well, China's going to say, well,
too high.
We like buying from the U.S. because the dollar is cheap.
Okay. Another asset class, oil. Some people are talking a lot now about Iran. If there really is margin for optimism with the U.S. economy slowing down, if the Iran situation calms down, if you're optimistic, that would be my first question. But the combination of both could, and now we're at the peak demand in the Northern Hemisphere with the winter. Once this passes, third factor that might push oil futures lower. Do you think such a scenario can play out?
Well, I mean, I think, let's just go back to August. I mean, when we were moments away from cruise missiles heading into Syria, and the oil price went up $3. Well, I mean, let's go back to July 2008 when it was 147. Here we were concerned about 112. Well, I mean, I don't know about your local petrol station, but my local petrol station just in the past 3 or so weeks is down like 3p, all right? So, the futures are indicating that there's not going to be a problem. You had the International Energy Agency reiterated in a report yesterday what they said in September, that the U.S. now will be able to produce more than 50% of their own oil and will be a major exporter, okay? And to the simple fact, what they'll be exporting, oil and oil equivalents, they will now be larger than Russia, okay?
Right.
And
amazing.
So that situation, and I mean, so you're seeing the U.S. now being able to produce their own oil, okay? Hence the reason, right or wrong, OPEC is more than willing to say, well, if we lose one or two of our biggest buyers, Maybe we better keep the price at a regional level rather than jumping it up to 125, 130. So I see oil, struggling. WTI at 100, Brent whether 102, 105, 108. I mean, it's just one of the. And the simple fact is, there's no inflation anywhere. So there's no inflationary pressures to put up oil. But as you said, I guess one of the politicians here in the UK 2 weeks ago said, well, it's going to be brown out. We're going to have no energy. Go ahead and chop all the trees down in your back garden because there's going to be no this, that, or the other. Well, I think that's just rubbish. And then, of course, the next day, SSE, one of the energy companies, raised their prices by 8%. So, and the government's already said that there will be no increase in fuel duty come the 1st of January. So I don't see a problem there. I mean, today we had a spike up in gold, up almost 2%. And I think that all that was a relief rally and people buying it because, some of the holidays now starting back in Asia. India looks like they'll, adjust, their import-export quotas like that to try to, to get the froth out of that
It's the gold
market.
buying season, if I'm not wrong, in India. Okay. So just to finish off, as far as Capitol Hill is concerned, your recommendation to our viewers would be look through the political tussle. If you're thinking about 1-2 years out, simply just turn off your television.
First thing I'd say is that I would vote for bringing back hanging. Also, the simple fact is that I think enough damage has been done to the U.S. Reputation. Where I am pleased for the first time, although I'm a pro-Obama, I've been disappointed in his selection of administrators, etc. I've been very disappointed there, but I'm quite pleased that he did not give in on which probably the only thing that he'll be remembered for is the Obamacare, the medical insurance. So it'll be a situation where today I think you're probably going to see, we bought the rumor last night. I haven't looked at the markets, but it looked like most of the European equity markets were off. They were in the red. So, probably profit taking. Maybe, everybody finally now being able to try to sell their Royal Mail shares. But yeah, I mean, I think it's a situation where I'm hopeful that if we have, once we get to December or January and February, and again, as I mentioned before, all the House of Representatives is up for re-election next November. The longer they delay any kind of nonsense, the shorter it is going to be till the November election next year, and people will do as they did in '96, where they voted out so many Republicans, especially Newt Gingrich, who was, I guess, the equivalent of the Tea Party in those days, being ultra right wing, and they voted him out and the other people. So it's a situation where I think sooner rather than later, when the U.S. starts back to work, and I don't know whether it's today or Monday or whatever, and we start getting economic data, then we can get back, we can forget quantitative easing, we can forget tapering, we can forget fiscal cliff, sequester, shutdown, etc. We can get back to say, what is the inflation rate? What is the ISM numbers? What is non-farm payrolls? And let's get back to being economists rather than politico gurus and this, that, and the other. So, it's a situation where
they'll have to face voters again.
Yes, they will. And as I say, I think it's sterling at 160 or above. That's much too high. I know if you're a technician, 160.20 is a major selling point, and we've seen that happen in the last. We even saw it yesterday when it sold off over 100 pips after it got to about 160.40 or something. The euro at this level is just absurd. I'm still a member that it should be in the 125 to 122 range. But
you be a buyer of equities now, in general, U.S. equities?
Again, limited. I think what you see now is remember the stocks that in the first 8 to 10 years of this millennium, they were bank stocks and they were commodity-related stocks. Well, I mean, bank stocks will do well. Especially here in the UK with this buy to help scheme or buy houses and stuff. But it's going to be, again, continuation of IT. It's going to be automobile that's doing well. And also, we talked about this. We were talking about benefits. Anything that's demographic, that's age-oriented, health care, this, that, and the other, insurance companies.
Great investments.
These will be great. And I've sold my Royal Mail shares. I took 48% out in 14 minutes.
You made how much? 50%?
48%. Sorry.
Not bad.
I like the company. I will go back and probably scale in. Once the froth. Because you still got some of the people that bought it by email or something like that. They can't sell till Tuesday because they haven't got their stock identification.
Okay. There's huge retail demand, but there were a lot of institutional investors who got left out from the IPO.
Yeah.
Is that what's propping it up?
Well, no. What propped it up is when it officially started to trade on Tuesday because of the size of the issue and the size of the company. Albeit it won't be till January. Okay, it will be on the FTSE. So any tracker fund. A tracker fund has to have X percentage of whatever. So you had to have the tracker funds had to buy it. Okay, so that kept it up near the 489, 492 level or something like that.
At what level would you be a buyer, more or less?
I don't know. It's like anywhere else. I just look at the lower the better. For the simple fact is that most people looked to buy it, and I'm talking the individuals, because at the point they were talking about before it got silly, 330, if you looked at how the company was talking about a dividend of probably anywhere from 5.8 to 6.1%.
Exactly.
Well, at base rates at a half of 1%, that's quite an attractive yield.
Sure.
And also the simple fact is that although nobody's writing letters anymore, I mean, the Royal Mail is DHL or TNT or whatever the delivery. And I mean, as well as I do. I mean, everybody's doing Amazon or buying online. So
more and more.
Yeah, and I mean, I think the last time I wrote a letter was to George Washington congratulating him for being first president of the United States. So I mean, nobody writes letters anymore. Do you know how to lick a stamp? I don't know.
No, I can't remember anymore. Fantastic. Bill, thank you very much.
Thank you very much.
And we're glad that you joined us, and we hope to see you here again.
Done.
Okay. And that's all from all of us here at Digital Oak TV. From London, until next week.